The markets are bracing for a Fed rate cut here in September, and we will have to speculate what type of cut will it be. 25 basis points, 50 basis points. Christopher Waller, one of the Fed governors, opened the door wide saying, well, I'm ready to vote on a jumbo cut. And with that said, welcome back to the SF Weekly Wrap-Up Show. My name is Kai Hoffmann. I'm the JR Mining Guy over on X. And of course, you're a host of the Soar Financially YouTube channel, where we host a ton of interviews with excellent market commentators to make sense of what is happening in the markets, what is shaping markets. We discuss the macro to understand the micro, meaning we look at geopolitics, we look at markets, we look at the Fed decision and many other factors to understand what is moving gold, what is moving silver, and what is moving our mining space. It's really, really interesting. So thanks so much for joining us here. Don't forget to hit that like and subscribe button, and let's jump into the weekly wrap-up here on Soar Financially. So as I said, we have various data points been thrown at us this past week. I think most notably, we're still digesting the announcement or the press conference by Jerome Powell in Jackson Hole last week. The market is reacting, dare I say, positively to it. From a gold perspective, very positive, because at the end of the month, we're looking at gold price over $3,400. 3.9, almost 4% monthly gain here in gold, which is exceptional, which I'm really happy with. But we'll have to look at some of the factors going into that, of course, together. Now, let's look at some of the data we've gotten this week. Real quick, one notable thing that we should be looking at is GDP growth rate, 3.3%. It's been revised higher by 10%. It was expected to be 3%. Now it's 3.3%. Why is that, you ask? Well, there's been a adjustment to the calculation. Let's take a closer look here at the official statement, and it's primarily reflected in the decrease of imports that have been subtracted from the GDP and an increase in consumer spending, which is interesting. But if you scroll down, there's one little interesting thing. It opens the door wide to conspiracy theories, quite honestly, is, let me find it real quick. Here, within investment, upward revisions to intellectual property products. What does that mean? Intellectual property, those are not tangible, those can't be calculated. I think you can just assume whatever price you want when it comes to intellectual property products, and that opens the door wide to speculation. What does it mean? Of course, there are other factors going into it where revisions have taken place. Upward revision to consumer spending is reflected here as well. Pharmaceutical goods, healthcare, food, and accommodations. We can assume that has to do with the summer travel season here. So it's just seasonality that's being reflected here in the GDP, which is to be expected, I would assume. But it also showcased that the economy is maybe stronger than we want to believe here. Like, we've always been painting a negative picture here on Soar Financially, meaning we always look at, okay, what could crack the markets, what could change, what could drive prices for commodities, gold and silver in particularly higher. But we have to be realistic looking at the economic data here as well. 3.3% GDP growth. I think it's the strongest GDP growth here in the G7. Let's take a quick look. Let me just verify. I haven't queued that up. Let's just jump in real quick. Let me share the screen here yet again. And let's take a look at that. Because let's take a look. GDP growth, U.S. 3.3%, China 1.1%. Germany, we're officially in recession. What are we talking about here? Not sure why that is not being mentioned more widely. Japan, 0.3%. UK, 0.3%, France, 0.3%, Italy, negative GDP growth, Canada, barely positive as well, 0.5%, and that's it. Like, so what are we complaining about here, right? Economic data seems to be suggesting that the U.S. economy is doing well. Of course, at what cost? That is a very different story. We have to debate whether the U.S. debt situation is sustainable. That is a very different topic of discussion, maybe one that also leads to the shenanigans on the HR side over at the Fed. Lisa Cook supposed to have been fired by President Trump just within the last week as well. Courts now have to decide whether that firing will be upheld, but she can't be participating in any Fed decisions right now, because even if it gets confirmed, the firing, and she still shows up at work, then the Fed is making decisions that it cannot back, meaning they're not warranted. You can't do it. If you have an employee making votes there who's not an employee, then it's invalid. It doesn't work that way. So very, very dangerous topic, which also leads to quite a bit of uncertainty in the markets, and that we're seeing reflected in the gold price in particular as well. Not necessarily in the S&P 500, but in gold. So I've mentioned the intro. So let's take a look. Like, what is the Fed? What's the Fed indicator here? Let's take a look at the Fed data. Let's take a look at the market expectations here by the CME Group. 85.1% are expecting a 25 basis points, so a simple one-step cut in the Fed funds rate. Fair, okay, I get it. Jerome Powell opened the door to it. He's concerned about employment, and that's why he's opening the door to say, okay, we're looking at Fed cuts. But I've said it last week, and from a pragmatic point of view, I don't see why rate cuts would make any sense. We just talked about the GDP data, 3.3%. Why would you race into a healthy economy? What are they seeing that we're not? What is not healthy? Yes, we can discuss there are certain subsectors that are not doing as well. Employment being impacted negatively, but I would make the contra case being discussing that with Jim Bianco on our show this week is about illegal and immigration in general. If we're missing workers, or if you are missing workers in the U.S., wouldn't that show up at some point in the employment data as well? Wouldn't the job openings increase? Because at some point, even illegitimate jobs would probably pop up on the legitimate list, don't you think? I do. And yes, there will be a lag until that happens. On another note, let me find this real quick, I mentioned it, the Fed and Fed Reserve Christopher Waller says he would be open to a jumbo cut in September. What does that mean? Well, it's not just 25 basis points. He's looking at more. And he says that the August jobs report will be pivotal in setting the direction of monetary policy. Well, I agree, because why would you cut rates if the job market is stable? And we still have to get an understanding of what he means by a jumbo cut. I've been skimming through the article here by the Financial Times, what that means. But the market, especially today on Friday, and this article is from today, Friday, August 29th, gold is reacting very positively, potentially on those news. As you can see, it's been only published 49 minutes ago as recording this interview, or this weekly market wrap-up, and we're just collecting data and getting feedback from the market, what that could mean. Let's take a look at the gold price together real quick, and let's see what that means. Like, what is the impact here? So we're just looking at what are we looking at? This is the 2-day. All right, let's do the 5-day. So gold has actually been, before I hit record button, we were at 34.13, like $6 higher, which is fine. That's all right. That's normal shenanigans in the market. Let's take a look. So when I was looking at it here. So 34.11, but we're coming down. We're staying above $3,400. So the market and gold is pricing in those Fed cuts already. The question is, how much is being priced in? Is the super cut that Christopher Waller wants to see perhaps priced in? We'll have to find out together, quite honestly, because it's really difficult to see what is priced into the gold price these days. How much of that is geopolitics? How much of that is Fed shenanigans? How much of that is just market-related? And how much of that is dollar decline? Let's take a look at the Dixie as well. As a result to that, 98. So the Dixie has been moving sideways. Let's take a look at the year-to-date chart. It is bottoming around that level, it seems like right now, waiting for impulse, maybe from the tariff front. We'll go into detail here in a second, what I think on tariffs and what we're seeing in corporate earnings as well. From Nvidia, we'll take a closer look at that here in a second. I'm just making sure that I've got all the macro stuff covered on the macro side before switching over. We talked about Trump exerting more pressure on the Fed, of course, switching out or forcing a switch out of Fed governor. Stephen Merrin could be confirmed as by the end of or within the next 2 weeks, is my understanding, what I've been hearing. He's definitely in the Trump camp. We had the revised GDP we talked about, and now let's take a closer look at some of the micro data that we've received. Let's take a look at the Nvidia earnings real quick. A really interesting indicator, not just on sentiment in the main markets in general, but also sentiment on geopolitics. geopolitics. Why is that important? Nvidia wants to export the H2O chip or H20 chips, sorry, not H2O, H20 chips to China, and we're waiting to hear from the White House whether that is possible. Really important indicator on the geopolitical situation, on the tariff situation between the U.S. and China. As you recall, we still don't have a tariff deal between the two nations, and that'll be key. One thing, like, okay, Nvidia beat earnings. They expect $3 to $4 trillion to be spent on AI infrastructure until 2030. That's a huge chunk of change. Nvidia will be reaping in most of that, of course. So Nvidia beat on earnings and revenue for the quarter, issued guidance that the current period will be topping estimates as well. Great. But if you scroll down in the article, there's an interesting tidbit that CEO Jensen Huang met with President Trump, and Nvidia signaled that it expected to get a U.S. license to ship those H20 chips to China. That is an interesting indicator on what is happening on the tariff front. As you know, China is holding rare earths over the U.S.'s head in terms of negotiating tools. And this is an interesting indicator that we will maybe see a tariff deal down the road, one that is positive for both sides. I'm not sure if it's just a goodie being thrown by President Trump or the White House administration towards China to get a deal done here. But those are the tidbits we're looking for in these releases. When it comes to that, those are the indicators that we're looking for when it comes to market moves. So that said, let's take a look at gold. Let's jump over to gold. Let's do that before we get into some of the mining news to wrap up the week, because there's been some interesting developments on the mining side as well. So we briefly looked at gold, 3407. It is still moving sideways. This is the year-to-date chart on gold. Let's make it a little bigger here. We're still caught here, but gold wants to break out. What is the trigger? What is the impulse going to be? I said it last week. I still don't know. Fed governors now talking about super cuts could be a potential trigger, but it's already being telegraphed. So we have about, 3 weeks, 19 days until the next Fed decision. So it's not really a black swan if it's already being telegraphed about 3 weeks out, right? It's being priced in. And it wasn't just enough to push gold over the line here to fully break out this morning. Again, we're recording this Friday morning, 9:30 a.m. European Central Time. So German time. It could change this afternoon once the U.S. markets open around 3:30 our time, of course. But that's something we can't predict, quite honestly. It's really difficult to do. But gold wants to move. Gold wants to break out, and we've said it here last week, and other technical analysts have been mentioning it as well. Gold is moving in a triangle form, and bull markets usually break out. In a bull market, gold usually breaks out to the upside. Markus Busler phrased that last week in one of his shows on the Aktionärtelefon. I'm stealing it blatantly. Go check out his show, by the way, as well. It's fantastic commentary in German on the mining side. He takes a closer look at mining stocks as well. So go check that out. Good friend of ours. Happy to send you his way. Now, let's take a look at silver as well. Silver's struggling a little bit. It's not showing the same... I'm perceiving it as struggling a little bit. Not perceiving the same interest, perhaps, from my perception, as gold is when it comes to that. We're looking at a silver-gold ratio of, 87? 87.8, so it's ticking up just slightly, ever so slightly, but also means silver's not staying or moving lockstep here with gold, although silver is touching on $39. It seems like silver's been bouncing off the $39 level here a couple of times now in the last few days, and once we break through 40, though, I think the bets are off. We're inching closer. It feels like the fuse has been lit. It's just a very long fuse. So let's wait for that impulse. Let's see what the jobs report next week shows, and some of the other macro data that we might be expecting. Inflation data we're still waiting for before the Fed decision as well. Copper has been putting an interesting move. Let me just bring up copper. I didn't prepare that here, but I've been reading about copper earlier this morning as well. Let's take a look. Which one is the most interesting one? Let's take a copper. Let's take this one here. So, as you can see, copper has been, of course, hit hard over the head. We talked about this last time in the last show, but it is slowly, very slowly inching back up. Of course, here on the 5-day chart, we've seen the bottom here, but Yeah, let's zoom out just a little bit. I just want to make sure that this is... Now, we're coming from a lower base here. Of course, I'm not a technical analyst, so please excuse that. But what I'm seeing is that copper is starting to put in a bit of a recovery rally here. 455 now. It is driven by positive economic data. Maybe some of the confidence is coming back. Recession fears have... I haven't heard the word recession, quite honestly, in any of the conversations I've had this week on the channel, and I haven't really picked it up in mainstream news as well. I know CNN dropped the bad R word a couple of weeks ago, but nobody else has picked up on that. So, and with 3.3% GDP growth, there's no recession, quite honestly. Let's be honest. So maybe some of the confidence is coming back, and Dr. Copper is signaling that confidence, because now the tariff news are priced out. Copper is not being tariffed in the way we expected it to be. Now copper is recovering. Now, let's look at the mining side. We've got some interesting news this week, but before I do that, I've had Rick Rule on the show just a couple of days ago, and I want to play a short clip from that because it really sets the mood. It really sets the tone. It's got me a little euphoric as well. Let's listen in. Let's listen in what Rick had to say. When it comes to that, maybe let me go back one step before we get more granular yet again here, Rick. But are we in a bull market? Are we in a bona fide bull market?
Absolutely, positively, without a doubt. And I think, by the way, that we're in for a bull market that has legs. That is to say, a fairly long duration.
Aren't you excited to hear that? We've been mentioning it, and if you've been paying attention to charts and many other things in our space, just the gold price alone, one could assume, but we're still waiting for sort of confirmation of what is happening, right? Well, let's take a look at the charts again. I've queued up here the GDX. Year-to-date performance is over 80%. The S&P is around 9 to 10% now, but the GDX, take a look at this. It's a beauty of a chart, and we're finally moving. Juniors are starting to move. That is the interesting part. The GDXJ also up. Let me add it to the chart here so you can see it as well. Let's use the same percentage scale. Well, they're moving up in lockstep as well. 75% year-to-date performance. Absolutely brilliant move. Gold up. Let's throw in gold here as well. Let's have some fun with this chart. Let's throw in gold as well just to give you an idea. Same percentage scale. Gold is up 29%. So performing nicely. We've had Dirk Bauer on. He's a professor at the University of Western Australia, and I've asked him what is the historical correlation between gold and the mining stocks, because I always thought it was 3-1, and he sort of agreed. But he was leaning more closer to 2-1. So we're already seeing massive outperformance by the miners to the metal, which is really, really important to confirm that bull market breakout. And the other thing that is really important, let me get rid of this box here, is really important is the financing situation. Money is flowing back into the space. At Oren Inc., one of the companies here that we run and have here at Soar Financial, tracks all the financing data. And I should have queued up a chart, and I apologize for that. But at Oren Inc. last year, we've raised $4.2 billion within our coverage universe. Keep in mind that includes companies below $1.5 billion in market cap, Canadian dollars, and financings, all equity financings below $100 million in market cap, in size. So no debt, no convertibles, no other financial shenanigans here, just pure equity, just to really take a look at the health of our sector. And as of mid-August, financings open totaled already $3.5 billion. So I'm thinking we're going to outpace last year, and we might be touching on 2021 levels again, where we raised $6.2 billion. Back in 2011, it was over $8 billion. I don't think we're there yet, so we're not in that frothy of an environment yet. And especially looking at who's raising money, I would say it's mostly the larger companies, meaning developers, later stage explorers, or companies that have a really, really strong management team. It's not across the board yet. The tide hasn't lifted all boats yet, so that's very, very good to see, because that means that the turds are still not floating with the tide, which is great. So we're not in there. And also one other thing is I haven't seen a flurry of new deals come to market as well. It's still fairly quiet on that front. Maybe I'm just not tuned in anymore, or as much as maybe others. But I'm still waiting for a flurry of new IPOs, new RTOs, new projects just come into market. I was joking in another conversation this week. I haven't seen anything come out of Nevada or anything new come out of Nevada in a long time. It used to be one of my favorite mining jurisdictions, and I haven't seen much yet. I don't have any money at work in Nevada right now. Actually, we do, Richline. But that company is already a few years old. I think 2019 it was set up. So nothing new. So that is that. But let's take a look at some mining news real quick. And we've got some concerning news out of Burkina Faso. Very frustrating news, but it was to be expected. And let's take a look here. West African Resources put out a press release yesterday, August 28th, that came with its trading halt. And it was a request from the Burkina Faso government to acquire, for valuable paid consideration, additional 35% of the company's subsidiary Kiaka mine. The mine is just going into production. It poured first gold only recently. It is planned or scheduled. Let me take a look here. 234,000 ounces of gold production per annum for 20 years, starting in 2025. So we're in the ramp-up phase, and I'm really concerned what this means. Yesterday, Orezone already put out a news release saying, or put out a trading halt, or had their stock halted, put out a news release says, yes, we're affected by this, or we're not affected by this. We haven't received a similar request, but quite honestly, once bitten, twice shy, right? I'm selling my position in Orezone. I should have seen this coming, or writing was on the wall that something like this would happen. We can all argue what valuable paid consideration means. Now that the company is going into production, the Burkina Faso government wants to step in and buy an additional 35%. I doubt that they will pay fair value. Quite honestly, nor can they. The GDP of Burkina Faso is $23 billion, if I'm not mistaken. And they have outstanding debt with international debtors. So let's assume 235,000 ounces. What is that worth? 2 billion, 1.5. Let's say in Africa it's $1 billion worth. 35%. That is $350 million US for that chunk. Can they afford it? I have my doubts. And that is where I draw the line. That's where it gets complicated, and that's why I'm selling my position in Orezone. Because why would they stop at the fence line and not move over and do the same thing over there? It doesn't make any sense, so I'm leaving the country. I'm done with this. I was too greedy. I should have sold long ago. I bought my position personally. It was in my personal portfolio at 90 cents. Should have sold at $1.30, but I was greedy. I was betting on the bull market to continue in that stock. It's taken a long time to get to that level. A lot of operational issues have been slowing down the process. I should have sold. It was visible. It was obvious that this would happen. So, yeah, fool me once, but done with that story, unfortunately. So, let's see, what else have I queued up? I've been doing a bit of research whether Burkina Faso can actually afford buying the 35% chunk, and you come across some interesting commentary. I have no idea who's behind the African report files, nor do I really care, quite honestly, but apparently Burkina Faso generates $18 billion from gold since Ibrahim Traoré took power, and then I looked at how much gold Burkina Faso actually produces, and it's 60,000 ounces. 60 tons of gold, and 32,000 ounces are 1 ton. You can do the math. It's roughly $6 billion a year. So, but that's the whole country's production. That means the Burkina Faso government would have to take control of the whole production in the country, which is not true. So there's a lot of fake news coming out of there as well. And we'll have to see if the government can finance it. You just type in Burkina Faso international debt, and you'd see that the government or the Burkina Faso country actually owes international debtors $5.6 billion. So I'm not sure how they can come up with that money. So what else have I queued up? I think that's pretty much it on the mining side. And that sort of puts a bow around our weekly wrap-up as well. I hope it was informative and interesting for you. Before I end my conversation here with you, gents, let's take a look at the Deutsche Goldmesse. I really want to highlight this. I'm really excited about what we're doing here. November 14th and 15th in Frankfurt. We're looking at phenomenal keynote speakers. Let me bring them up here on the screen, in case you don't know. We have Rick Rule coming out. I've had him on the channel just this week. Keith Neumeyer, Alex Kreiner, phenomenal geopolitical commentator. David Finch, phenomenal mining investor in the space. He's the CEO of Ixios Asset Management. Marcus Busla, I've highlighted him earlier in this conversation, in this weekly wrap-up. as a very smart, probably the most influential newsletter writer and mining stock commentator in Germany right now. John Forward, very smart exploration stage investor. 30% of his portfolio is in grassroots explorers. Go check out the Lowell Resources Fund for his portfolio. Really interesting stuff in there. And Keith Neumeyer, of course. I'm not sure he needs a lot of introduction, but he's Mr. Silver, CEO of First Majestics. And we have a couple of fantastic panel guests as well. Christian Watzian, Clem Chambers, just to mention a couple. We have a few more lined up here. We'll be adding them to the website as well. But be reminded, it's free to register. For an interested investors. Just keep in mind this is a professional investment event. We don't have booths. We have about 30 mining companies joining us in Frankfurt that are looking forward to meeting with investors to present their story. So make sure to use that. And with that said, let me thank you very much for tuning in. Happy Labor Day weekend. And one thing I've actually queued up. Let's end on that. It is the economic calendar for next week. Let's take a look together at what we can expect. What should we be paying attention to in the marketplace that could be market moving? Let's switch to this view here. We have ISM manufacturing data. That'll be interesting as well. But let's be honest, Jolt's job opening report on Wednesday, but then non-farm payrolls and an unemployment rate will be key to really understand why the Fed opened the door last week in Jackson Hole. So that's coming out on Friday. I will be traveling next week. I'll be on the road as of Wednesday. I'm flying out to Idaho. I'm going to do 2 site visits. Hercules, a portfolio holding here at in the Camaxos Resource Fund, and Scout Discoveries, a private company just next door to Hercules, which I'm personally invested in. But then I'm off to Beaver Creek. Really looking forward to attending the conference. I have over 30 meetings lined up in 3 days with mining companies to dive deep, look at some opportunities, and find a few more exciting positions for our fund as well. Let's see if there's some bargains to be had, because a lot of stocks have moved already. So time to do our homework, time to find some value. Thank you so much for tuning in. Let us know what you think about these weekly market wrap-up episodes. This is only the second one. This is far from perfect. Comment down below and subscribe to the channel. Thank you so much for tuning in, and we'll be back with lots more here on Soar Financially. Take care out there.